How many of you came yesterday? Okay, you survived the rain. It was a bit brutal. Okay, today we'll talk about our common future when it comes to the economy, when it comes to markets. And I hope that you will all learn something from this session. I will try to engage with you as much as possible. We will talk about this man. I gather he's not very popular here in Estonia. No? Not so much in Sweden either. But it's something that we need to, of course, always think about when we talk about politics, when we talk about the economy. Okay, let's kick off. I will say something to start that probably will shock a lot of you. We live, I don't think you've heard this from an economist before, but we actually live in very, very uncertain times. Uncertainty is very high right now. And it's not uncommon for economists to say that, I know. But over the course of 30 years, which I've been in this business, I would say this is a very uncertain situation. And the reason is that we have lots of different types of uncertainty to deal with. First of all, we have this one, the business cycle. Will growth go up or will it go down? I mean, that is something that markets always grapple with. It's something that we're used to. Right now, there are some question marks whether growth will be able to continue to hold up as good as it has, especially, of course, in the US. But we have more uncertainty than just the business cycle. We also have this. Stock markets. How many of you are invested in stocks? All of you, more or less. Well, me too. Have you bought these fancy US stocks that's gone so fantastic over the last few years? Yeah? But they are expensive now, right? There is even talk of whether we have a bubble. Okay, this type of uncertainty, it's not unseen, it's not unheard of, but it's not as common. It's something that we worry on from time to time. Okay, then we also have this one. Are we now in more or less a transition into a new world economic order, which could be a very, very messy situation? It's, of course, something that is extremely rare. This doesn't happen often. Last time, I guess, it was in the early 90s, fall of the Berlin Wall, liberation of the Baltic countries, so on and so forth. That was a positive shock. That increased globalization. It was really good for markets. It opened up a part of the world economy that had been closed or secluded from the rest for a long time. We also had the rise of democracies during that period. Where are we today? Today there is more protectionism. A lot of questions whether we will have continued democratization of the world. So, this is something that's very rare, but still something that we need to think about. Okay, biggest thing during spring, and still is, I guess, tariffs. And I really like to look at long time series. I think they have a lot to say about where we are today and also where we might be heading. And this is a really long time series, going back to the 1850s. Shows you the average rate of tariffs that the US had on its import. And you can see that for a long period of time, basically since the 1980s, tariffs have been very low. And now they've gone up to 10% or about there. Bit about 10%. The question is, where will we end up? I mean, 10% is a shock, absolutely. But we could go higher, of course. 10% is a big increase, but that is today the good scenario. It could be 20 if we are unlucky, and that will, of course, cause more problems. So, what is the problem with tariffs? Well, of course, first of all, we have the actual tariffs themselves, that they make things more expensive. That's the problem for growth. But we also have another problem here. And that has to do with uncertainty. Now, is that word again, right? This is an index which I like. It's an index that tries to measure the trade policy uncertainty in the US. You can see it went up a bit during Trump's first term in office, and then it went back down again, and now it's exploded, more or less. It's gone to levels that we've never seen before, but has since come down quite a lot again. Why has it come down? We talk about tariffs all the time. Well, there are several reasons. One is, of course, that we perhaps have a few trade agreements being announced. But most of it, I would say, has to do with this. You recognize this abbreviation, TACO, Trump always chickens out. I mean, we had tariffs on April 2nd, it was, which would come into effect immediately. Then it was postponed until July 9th. Okay, now we're talking about August 1st. I mean, markets are seeing through this. I mean, it's not that we take all these threats as seriously as we did a few months ago. So, that is, I think, a comfort for us all. But let's talk about the bigger question here. What about the global development here? Do we need to start to think about the world which is much more protectionistic, much less open? Is that our future? And I've talked a lot about this, I thought a lot about this, and the question is protectionism on the rise? Is globalization dead? What do you think? Is globalization dead? No? I fully agree with you. You're such a smart crowd. I can sense that already. Okay, let's go back to it. What is the biggest driver behind increased globalization? What do you think? What's the biggest factor behind driving globalization forward?
Workforce cost.
Workforce cost, good one. More suggestion? Innovation. Yeah. Do you remember the 1800s? Let's go with this first. This is an index which shows you the level of globalization. And it's not just economy, it's basically different factors. And this small decline here, that's COVID. But it's gone up more or less as long as we have this index. Another way to measure globalization is to look, of course, at trade. And whenever you trade with foreign countries that have different currencies, you need to make a foreign currency exchange, right? And if you look at the turnover in the foreign exchange market, the daily turnover, it's now $7.5 trillion every day, and it's just gone up. So despite problems with tariffs that we had already during Trump's first period, globalization has increased, trade has increased. Okay, let's get back to this question about drivers. Innovation was the last thing I heard. And let's go through this, through history. In the 1800s, you had a lot of technical innovation. We had the invention of the steam engine, which had extremely good effects on globalization because it made it possible to transport things much quicker, over much greater distances, and also at a much lower cost. That is what drove globalization in that century. Technological innovation. What happened in the 1900s? Well, we had new inventions. We had huge improvements in logistics. We had a lot of new inventions, airplanes, cars, trucks. They all drove globalization further ahead. So, what has happened in our century so far? What's the biggest innovation that has fostered globalization in our century so far? What do you say? Internet, exactly. I mean, it would be completely unheard of for me when I was a kid, to buy something from a factory in China and get it delivered to my front door. Today, that's business as usual for most of us. Okay, has there been any other innovation that will drive globalization forward, do you think? A lot of them, of course, but this one, which we'll talk more about, AI, truly global force, produced in the US, but used by everyone. This will continue to drive globalization. So you don't need to be overly pessimistic. That's my point here. Okay, let's go back and talk a little bit about where we are here now. And this is a messy table, I know that. So what is this? Well, it's a lot of numbers, a lot of colors. I think it's also the best guide for where growth in different countries is going in the medium term. So these are actually numbers that says or answers the question what companies think about their own situation today compared to how it looked last month. And whenever you're above 50, well, that means that it's more positive than bad, more positive than pessimism. And you can see that the US is still doing fantastic. There's still some real good growth in the US. The biggest change here, however, is not the US. The biggest change is that Germany, France, those countries, they used to be stuck in this very bad corner of this table. Lots of problems. And they are now starting to see some revival here. It's still not really good, but it's moving in the right direction. And that is going to be a very good thing. And it's, of course, driven a lot by very much increase in investments now in defense, but also in infrastructure. And that's really, really good. So I would say that markets overall are perhaps a little bit less worried about growth now, and especially when it comes to US growth. But what do we worry now about? We worry about tariffs and we worry about something else, especially when it comes to the US. What do you think it is? What's your biggest fear when it comes to the US economy? Debt, exactly. And it's really, really a big problem here. If you look at the US debt level as share of the size of the economy, share of GDP, you don't need to go further back than to 2005, before the financial crisis, when the US actually had a debt which was around 35% of GDP, which would be considered extremely strong and good today. But then you had the financial crisis, you had COVID, and now we stand at 100%. And with this big, beautiful bill that Trump has just passed through Congress, this looks like it will continue to explode over the next decade. But why didn't we sound the alarm already? Why didn't markets sound the alarm already during the period from the financial crisis up until COVID? Well, it was a very simple reason. Because markets don't really care about how big the debt is. Markets care how much does it cost to finance this debt. And if you look at the cost, you can see that it stayed around 1.5% of GDP for a very long time. Because interest rates just kept falling. So the debt grew, but interest rates just kept falling. But now it does look a little bit different, right? And on this trajectory, we're going to have a big problem. So how will this be resolved? I mean, will the US just stop paying their debts, default on their bonds? Never, exactly. And why is that?
They would lose king dollar.
Exactly. The debt is denominated in US dollars. And if there is something that the US can produce infinite amounts of, it's US dollars, right? They have the printing press. They will never run out. The question is, of course, what will that dollar be worth, right? And it hasn't gotten off to a good start this year. The dollar has been weakening constantly against the euro. And do you think the dollar will continue to weaken if we look a little bit further ahead? How many of you think that we will see a continued dollar weakening? Yeah, I agree. And there are many reasons for this, right? We have, of course, Trump. I mean, he's not inducing a lot of confidence in the US currency. We have also a situation where foreign people, investors around the world, they have bought a lot of US assets. And there has really been no reason to hedge those assets because the dollar just kept strengthening. And that, well, you see, now it's getting dramatic now. Now people that own a lot of US assets are perhaps beginning to think a little bit different about this currency exposure they have. Perhaps they need to hedge a bit of those dollar assets. And that is the same thing as selling dollars, right? And then we have this also. The revival of the EU economy. Germany is spearheading this big fiscal push with more investments into defense and infrastructure. That is also inducing confidence in the common currency, in the euro. Okay. So, the next big question when it comes to currencies. Will the dollar be replaced as this global reserve currency that it is today and has been for many decades? What do you think? No? Any other voices?
As long as we have oil, it will be a reserve currency.
As long as we have oil, it will be a reserve currency? I agree. I think that we may be in the process of this shifting. And the euro is, of course, the obvious candidate to take over. But it will take time. It will take a long time. And then I'm not talking about a few years, but perhaps decades. And there is one ultimate guarantee that the dollar will always be accepted as means of payments more or less anywhere in the world. And it is this, right? As long as the US has the military capacity to basically express its influence anywhere in the world, I mean, this is still going to be the ultimate guarantee that the dollar will not lose its status. Okay, let's switch on to something more interesting. Inflation. I mean, it's been a very bumpy ride over the last few years. And our view is that inflation is not going to be a big problem going forward. We think inflation is probably going to be right around where central banks want it. There will be a bit of increase here in the US due to tariffs. But the way this works, according to the textbook at least, is if you don't just continue to raise tariffs every year, that effect will peter out after 1 year. So inflation will go back to previous trends. And that is what the Fed is also betting on. And it's very interesting, because when you look at inflation, you can see that the US and Europe follow each other quite closely. Inflation is a global phenomenon. You can see it, look at Sweden. It's basically the same, right? And this is very interesting, because then you can use one to forecast the others, right? And I said I liked long time series. This is my longest time series so far. This is Swedish prices, consumer prices, going back to the year 1300. So now we have more than 700 years of data to work with here. And there is a very interesting pattern here, which has something profound to tell us about the future. Can anyone see it? I mean, it's been up and down and over the centuries. I see you all start to think about, okay, when was the Black Death? How did that affect things? It's much simpler than that. I like simple stuff. You see, in Sweden, and remember, inflation is a global phenomenon. In Sweden, inflation has been high during uneven centuries. And it's been low during even centuries. And this is a 700-year plus relationship. And for us, the fortunate thing of course, we are just 25 years into this even century. So don't worry too much about inflation. It's going to It's going to be fine. I promise you. This is good news. It's good news, of course, also for central banks, right? This is the European Central Bank and the Federal Reserve in the US, and what the market thinks about where interest rates are moving the next year. And it's not so much to hope for here in the euro area, but perhaps one, probably 2 rate cuts, a bit more in the US. So this is good, right? We want central banks to cut rates. That's much nicer than when they raise rates. And a lot of you are invested in the stock market. And of course, do you think stocks are cheap or expensive? Expensive, yeah. They are very expensive, right? Again, if you look, I like simple stuff. So a simple price, earnings, evaluation, that's what I use when I think about stock markets. And this is, again, it's a long time series, going back to the early 1980s or late 70s. And if you look at on a PE valuation, 12-month forward-looking, you can see that we have only been higher than we are right now on 2 occasions. One was the dot-com bubble at the millennium. How many of you were in the market at that time? I was. It was painful times. And of course this, which I choose to call stimulus euphoria, where we had negative interest rates, we had governments that just flushed the market with more and more money, writing checks to consumers and everything. But now we're up there again. So, there are, of course, some reason to talk a little bit about stock market bubbles. We need to do that. I know it's an uncomfortable subject, but we need to do it. Do you know your bubble history? Well, there's been many financial bubbles through the years. These are some of the most famous ones. Tulips, of course. Most people think about that one. Have you heard about the South Sea Company? Well, that was one of the first bubbles as well. And there's some interesting dynamics, I think, when it comes to bubbles. And let me assure you, this is completely unscientific, but if you look at bubbles, you can see that, well, start by going up, and there is some pause halfway, right? And then it continues, and then there is some hesitation, and then everything goes to hell, right? And even here in the 1600s, you can see that obviously financial data wasn't as frequent in those times, but you can see there's an upturn, there's some kind of pause, another push up, and then things go to hell, right? There seems to be a dynamic to these things. And you are all smart people. But that's not a guarantee of not being caught up in a bubble. Again, let's look at this bubble, one of the first ones. South Sea Company. It was a company that transported goods from, I think it was the West Indies back to Europe. Fantastic invention at the time, and they bought cheap, sold expensive. And you recognize this guy? Anyone recognize? I can say this is a very smart guy. Newton, exactly. Sir Isaac Newton, allegedly one of the smartest people on earth. Invented a lot of things, as you all know. He actually invested in this company. And he was early. He was a smart guy, right? He went on early, invested in this company, and the stock just kept rising. And he exited. Very, very happy with a handsome profit. But then something terrible happened. You know what it was? He was out of the market, but his friends were still in the market, and they got rich. And that really bugged Newton, right? He had this extreme FOMO. So he just went for it. Went back into the market again, and now with a lot of money. And you can get, you can already anticipate how this ended, yeah. He exited the market almost ruined. So remember this, if you do a bad stock trade, much smarter people than you have made the same mistake many years ago. Okay, keep this curve. Remember this curve, this chart? And now we transition to modern history. This is a painful memory for myself. This is, how many of you know Ericsson? It's a big telecom manufacturer in Sweden, yeah? It used to be Sweden's by far biggest company, and it had this, this bubble in the 90s. It's never recovered. And you can see it's this upturn, it's the pause. Remember the pause? And then this, and then everything went south. So let's overlay another company. This is NVIDIA, right? It looks similar. It's scary similar, right? But again, markets, economists, that's really difficult, right? So I've taken away the last month of data, and now this looks much better. So this is, again, it's not a trading room. And perhaps things are different this time. Perhaps NVIDIA is absolutely not a bubble. You know, I asked the AI earlier this week, I asked the AI, and I used the best version of Google Gemini, and I put it on this really deep think mode, and I said, get me an analysis of what is the best stock to buy in the world today. And it thought for like 15 minutes. And what do you think it came up with? NVIDIA, exactly. So AI is something different, right? It's going to impact us all. It's going to impact the economy in a very profound way. And it will increase productivity. And it will also boost growth. And it will do this in a way that still does not create a lot of inflation. That's the promise of this fantastic invention. And I guess you are all using AI for managing your portfolios. No, not yet. But I've used it a lot. I've written a lot about AI and the revolution that we are now going through. And the first time I basically used AI was, of course, when we all heard about ChatGPT, late 2022. Back then, you couldn't really ask the AI for investment advice because it really didn't say anything. It said, be careful, don't do too much of it. It didn't do any recommendations. So at that time, I just thought, I asked it something it can do. Basically, draw me a picture of how it will look when Jerome Powell and Christine Lagarde cuts interest rates. And this was in 2023. And this is what it came up with. I mean, what can I say? I'm just happy I'm not living in Denmark because there seems to be... And now, I just come to think about it. The US and Denmark, they have a bit of a shaky relationship these days, so perhaps it was ahead of its time. Again, it's not a very good picture, but then let's fast forward 1 year to 2024. Same question. A lot better, right? Yeah? It's not perfect. You can see if you count Christine Lagarde, she has 6 fingers on this hand, but it's okay. So how do you think it's improved further? Yeah? Today? Is it better? It is better. Yeah. So, with those two very happy central bankers that I hope will deliver more rate cuts in the coming year, I think I will end. And thank you so much for your attention. Thank you.
Thank you very much. We can have some questions from the crowd, so raise your hand and we will deliver the microphone. There's one hand. And one question, what AI says about the best Swedish stock to buy right now?
Well, I need to ask it. I didn't do that, unfortunately. But you can all go and do this exercise, and it's really impressive, the answers that you get.
Do you trust it? Did you buy NVIDIA?
No, I'm a low PE guy. I don't buy companies with a PE of more than 50. So I don't, no.
Thank you for your presentation. You spoke about rate cuts and US dollar weakening. Could it be the case that because US dollar weakens, European exports, which 20% goes to US, will become so much less attractive that Europe has to cut rates to make our exports more attractive? And could it lead to lower rates, more possibilities in real estate, and so forth?
Yeah, absolutely. That could happen, and that is, of course, one of the classic things when it comes to if you have a currency that strengthens, your export becomes less attractive to other countries, and well, you basically need to help your economy a little bit by cutting interest rates, and hopefully that interest rate cut will also make the currency a little bit weaker again, so things will sort of balance out. So that's definitely one of the things that the ECB is looking at. But remember, while currency changes are important, they are much more important for small countries than for big countries. So when you talk about the whole euro area or the whole of the US, which is also a big economy, currency is less important for them than for a small country like Sweden, for example.
We can have one more from the audience. Here's one hand. There's another. We can take those two. One is here, and we remember you. Meanwhile, you mentioned you are a low PE guy. Which company sectors you think is worth looking into? What is interesting for you right now, given the prices are high?
Well, I'm mostly focused on, of course, the Swedish market, and in that sense, it's industrial companies I'm quite okay with. I work in a bank, so I wouldn't need to say banks, of course, but that's also low PE. Real estate, I think it's very important to be sort of very discretionary if you want to invest in real estate. I think that if it's more tilted towards logistics, that's probably better than if it's tilted towards retail or even housing. Mm-hmm. But it's a Pretoria.
Swedish banks operating in Estonia?
Well, that's Swedbank and SEB primarily, I guess, and those are also big banks in Sweden. So.
Mm.
What is your opinion with the coming of AI? What will happen to jobs?
Yeah, that's a really good question. What will happen to jobs when AI improves the way it does? And I think that this is a big threat. It's a big threat to the economy in the short term, or medium term, I should say, because the economy can always adapt. We can always adapt to a new thing. And AI, if you sort of disregard the sort of Terminator-style scenarios, I mean, what it will do is to produce more wealth for the world, basically. And that's a good thing. But in the transition periods, there may be a lot of people sort of stuck in the middle. And we need to find ways of dealing with that, and we will do that. But short term, it could create a lot of friction in the labor markets. And this is also, I think, if you listen to big tech companies, they have so far basically shied away from this question. They're just saying that AI will not take jobs, or you don't risk losing your job to an AI, just to a human using AI, and those kinds of things. I would say that's a big deception, because this technology is now advancing so quickly that it can do more and more things that humans only could do before. Will create friction, but hopefully it will end well.
And we had a question from there.
1, 2? Okay. Quick question. Do you think Trump is breaking intentionally and systematically law-based world?
Sorry, breaking the?
Intentionally law-based world.
Law,
rule.
Our rule-based world, our law-based world. Absolutely. I think that this is one of his goals, to actually don't have a lot of international rules that a big country like the US need to adhere to. Much better to have a world where the big guys decide everything among themselves and don't need to care so much about everything else.
Johan Javeus.
Thank you. Thank you. Thank you so much. Oh.
No,
I have it.